Daryl Willie Insurance. What's up, everybody? Welcome back. Welcome back. Still drinking that turmeric tea. Progressive is saying that they're gaining as drivers shop around for auto insurance. Can you believe that? Progressive is saying you guys are out there shopping for auto insurance. We're going to find out what is really going on. All right. Although it may have seemed like drivers had thrown in the towel on trying to find cheaper auto insurance prices late last year, a new study of consumer behavior finds they're back to shopping around. They're watching you guys. Cheap insurance, budget insurance, I need insurance. How do I reduce my insurance? They're checking you out, right? In addition, when they decide to switch carriers, Progressive is the big winner among the top auto writers. So when did you guys put Progressive number one? Huh? Everybody likes Progressive's rates and service? We're going to find out. The latest loyalty indicator and shopping trends, LIST report from JD Power conducted in collaboration with TransUnion shows the shopping rate or quota rate for March 2024 came in at 13.5%. That's making the highest rate for a single month since September 2020 when this data was first captured. It looked like consumers responded to continual premium increases by shopping in the first half. You guys didn't like them premiums going up, did you? Now, remember, a lot of premiums didn't go up from the pandemic. There was a lot of freezing of raising rates in a lot of industries. So insurance companies have not fully recovered from the pandemic to get the rates to where they should be. All right, so you guys have been shopping rates. All right. The insurers continuing to take rate in the background of this change in consumer behavior. So insurance companies are taking a look at what's going on, and they're watching from the background, looking at your behavior, watching you shop quotes. The report also notes predictable seasonality as another factor for explaining why increased shopping followed 3 months of decreases in October, November, and December of 2023. Now, January 2024 shop rate came in at 12.1% compared to 11.7% in December 2023, followed by even a higher shop rates of 12.5% and 13.5% in February and March. So, find me a quote, get me a cheaper insurance is going up, up, up. The switch rate coming in at 4.0% for March 2024 compares to 3.5% in December 2023. Tracking the movements of customers between 10 large auto insurance carriers, a chart in the report shows 6 carriers, that is American Family, Geico, Liberty Mutual, State Farm, Travelers, USAA, lose most of their business to Progressive when customers decided to switch. Woo! Give you that one again, guys. If you're with American Family, Geico, Liberty Mutual, State Farm, Travelers, and USAA, you found your way to Progressive. Why that is, I don't know, but that's what the data's saying. A lot of you have left those big carriers and you're over at Progressive, and it seems like you're happy, right? Now, a 7th carrier, Farmers, is equally likely to lose customers to Progressive and State Farm. If Progressive loses a customer, it's most likely to go to State Farm. State Farm also gains customers from Allstate and Farmers. Can you guys believe they track this information? I'm telling you, in this new world, there is nothing you do that is not tracked. All right. The report also indicates that Nationwide is most likely to lose customers to Allstate. Confirming the information, Stephen Cruden, Senior Director of Global Business Intelligence Insurance, said Progressive continues to show their tremendous strength in growing auto insurance policies in force as they win the largest share of switchers from six of the 9 largest personal lines auto insurers, taking themselves out of the mix as they cannot lose customers to themselves. There's been a great deal of upward pressure on auto insurance rates in recent years. Cars are more expensive especially because of the technology in them. We spoke about that. And people have been driving more recklessly. Guys, they are tracking your driving. I am telling you, if you want to make it easier for these insurance companies to jack these rates up, you're giving them the open door by reckless driving. These cars are smart. I will say this probably in every video. Your car is telling on you. You're not in your car by yourself with your Starbucks or your Dunkin' Donuts, and you jamming on brakes, switching lanes, speeding, and doing all kinds of crazy stuff, and you thinking nobody's in the car with me, no cops saw me, everything's cool. It's not cool. They're getting the data off your car. All right. So think about that. Okay. Cars are more expensive, especially because of the technology in them, and people have been driving more recklessly. Many don't take advantage of opportunities to reduce their premiums. I put out a list of videos, speak about multiple things you can do to try to reduce your auto premiums, like a defensive driving course. Think about that. You're never too old to learn how to do it again, right? Insurers are playing catch up, and there may be more rate increases in the future. Read that again. Insurers are playing catch up, and there may be more rate increases in the future. Why? Because I told you, they are not fully where they should be. Remember when they put the rent freeze on during COVID, the pandemic? They did it in a lot of industries. They could not roll with what was going on. They had to keep their rates artificially low. I said it, artificially low, because the rate should have increased back up. All right. So that is what's going on. All right. Don't be surprised to see additional interest in shopping and more customers switching their policies as a result. He stated in an email to carrier management. The report also tracks customer reasons for shopping. My rate was too high is the most common selection among 5 possible choices and shows variations in quarterly shopping rates by region. Listen, they track customer reasons. And the number one reason for people switching carriers was not for customer service, was not that their policy was bad, was whack, was not a good policy, did not serve their needs. It was because the rate was too high. Think about that. The rate was too high was the number one reason why people left their carriers. Rate was too high. Okay. The largest jump in shopping at a regional level was in the South, where shopping increased from 13.2% in the fourth quarter in 2023 to 14.4% in the first quarter in 2024. So if you're in the South, you definitely shopping for cheaper rates. All right, so that's the data. That's what's going on. Got you guys up on this information so you can follow and look at your own personal plans. I appreciate you listening to me, spending time with me. Keep following Daryl Willey Insurance. I'm going to bring all this information to you as quickly as humanly possible. I appreciate you. Be safe out there. I'll see you in the next one.